everyone, welcome to Peakpine Edge, brought to you by Peakpine Solutions. This is a video series that simplifies consulting jargons and help you to take actionable, implementable steps that would grow your business. Now today and in this series, we're going to be talking about something that is very pivotal to your business, and that is the simplified profit and loss. So many entrepreneurs complain about selling a lot of goods, having a lot of services, that has been commissioned to them. However, their bank accounts seem empty. Now, there's a major tool that you can use to track the financial health and profitability of your business as an entrepreneur, and that is the simplified P&L or simplified income statement. Now we're going to start with one major thing on your income statement, and that is your revenue. What is your revenue? Your revenue is the total sum of money that you got after selling a product or a service. Now, but you didn't use all that, right? And you're not going to keep all that, right? Now there's something called COGS. That is the cost of goods sold. If you're a service provider, you can say the cost of good service rendered. You are going to take your revenue and your COGS, which is your cost of goods sold, and then that is the cost of the product that you created and then you sold, and then minus the store. You get what? You get your gross profit. Now, take your operating expenses. What are your operating expenses? Your fixed costs and your variable costs. Your fixed costs are costs that remain the same: salaries, rent. Your variable costs are costs that, commissions, fees to pay for something. That's your variable. You sum your variable costs and your fixed costs, and then you get your operating expenses, which is also called OPEX. Now you minus your gross profits from your operating expenses, and you get something called the net profit. Your net profit is what will determine how healthy your business is, how healthy you are at the moment. If you're an entrepreneur and you're facing this kind of problem, your immediate action is to download the simplified income statement or profit and loss statement and plug in your figures from last month, right? The last 30 days, plug in your figures and then just do these calculations, this step by step, and see what your actual profitability is. Cash flow does not mean profitability. You need to be able to understand what your profitability is. However, if you see that you are profitable and you've been profitable, however, your bank balance seems a little bit low, that means that you probably have a cash flow problem. And this is what we're going to fix in our next video. Don't forget that cash at bank does not mean you're profitable, right? Thank you. Hit the subscribe button on our YouTube channel, like, drop a comment. See you in the next class. Bye.